Happy hump day. Welcome to the Cryptologist channel, where we're going live to describe what happened to our friend Bitcoin. Definitely laid an egg, laid a little poo-poo on us all, and we thought, hey, we're going to the moon. We broke above 46K. You know, life is good. And then Bitcoin did what it does too often and faked us all out. But it doesn't mean it's going to be all doom and gloom. But we do have to reassess our bias, our thesis on where things stand, so that we aren't holding the bag when it's fallen hard and losing all the monies and getting liquidated. So that's why I'm here. Basically to keep you level-headed, show you where we're at, what's going on, how it happened, to give you a perspective from what I try to be as a level-headed, straight shooter, unbiased analyst looking at the chart. And so hopefully it'll train your brain to be thinking the same. But it's really hard to not get emotional. I still do it, so don't let anybody tell you that it's super easy, because when you trade with any kind of money, it doesn't have to be any size. It's relative, right? You don't want to lose it, and it's easy to let greed take over. So I think training yourself to implement very strict and stringent risk management is the key to being a successful trader, to stay in the game. So let's break it down without further ado. Let's jump into the daily chart, and we'll also be looking at the 1 hour chart, zooming in. Starting off with the daily chart, you can see that we had a clear breakout of this range that we had been trading in since January, after the huge crash from 69K. We broke above 46K, and right before that we broke above an ascending triangle. You can see from here, I charted on Twitter. If you're not following me on Twitter, follow me, the Cryptologist. If you're not following me on YouTube, go ahead and subscribe and like now, and make sure that you stay in the loop whenever I jump on these live streams again. But we basically broke out of a lot of resistance that we've been stuck under for a long time on a high time frame. So on that same move, we broke above the ascending triangle. We broke above, you can see I drew a fib extension. We broke above the golden pocket that we had also been under since the beginning of January. And things were good. We also broke above 46K, which up here there was a little bit of some horizontal resistance that we also had right there. That was just right above the golden pocket and the ascending triangle. So trifecta of resistances that we broke through, and it was a strong move. Everything was good in the hood until we got rejected at the 200 moving average. So initial rejection, and then we had the next day that retested it again, and never came back to that price level at 48K. And also on that same fib extension that I drew from this impulse here all the way to the lows, you can see that it was a 786 level. So you'll now mark 48K as a level of significant resistance. We have some confluence with a number of things that will now be a roadblock moving forward that we'll have to get past. But worst case scenario happened. We retested the ascending triangle and the golden pocket, and it's not uncommon to have a retest, right? And it will essentially, what that would do is it could flip that strong resistance that we'd been held under for so long since the beginning of the year, and now flipping it to support would be very bullish. If we could have bounced there and had a strong move up and through the 786 above the 200 moving average and on to 52K up at the top of this fib, that would have been very strong, and bears would be almost non-existent at that point, holding on to dear life, and we'd be calling for all-time highs very soon. But the retest had a bounce. We retested again, and we've fallen through now on a daily candle, which to me now has invalidated the ascending triangle, and it has broken down and caused a deviation above these horizontal levels. So as a trader, now I am I've closed out my longs, and I'm looking for opportunities to short back at this level because bears are in control again, and I will give you another reason why. Before I do though, I do want to point out a couple more things. There's the 100-day moving average that I've posted on TradingView and Twitter that has been a moving average of significance on the daily time frame. And you can see moving back all the way to 2020, the moment we broke above it, we had a bounce here, bounce here, bounce here, and it propelled us. As long as we were above the 100-day moving average, it allowed for price to really extend and pump. The moment we broke down here on 2 candles below, you can see that price plummeted heavily. And then we had a quick move, but it was a fake out here above the 100-day moving average. But then the next move up, it was an indication that we were about to start another bull trend. And we retested the 100-day moving average a few times here, and it acted as support, and we got a strong move off of it. And that is what led to the 69K all-time highs. We broke down underneath it the first time, and we never came close to 60K again. And that's what's really plummeted us to the range that we've been in since January over here. Now, the first time we break above it again, and it's a good sign. But, right now, a lot of people are bearish because we've lost this horizontal level, the fib, golden pocket we had, and the ascending triangle. So a lot of things bearish have just happened. But if you zoom out, there's still a bull case to be had based on this previous fractal, this previous scenario here above the 100-day moving average. As long as we're above the 100-day moving average based on, what history tells us when price moves above it and stays above it for some time, there's a good chance that we could bounce somewhere near it, right, and keep moving up. This could just be a deep correction in a high time frame strong leg up back to all-time highs. So not a reason to be super panicked right now, just very cautious and de-risking for sure, because it's no longer a very pretty all flowers and rainbow scenario. We're trying to figure out what's going to happen from here. Are we going to stay under here? Are we going to quickly spring back up on this next daily candle? What's going to happen? So you got to be very cautious. And the other thing I want to point out is the super trend is a very popular indicator that people like to trade off of, and it has strong confluence right above the 100-day moving average, and it's right level with the 0.5 fib extension level. So we could be seeing a bounce right in this 42.5 to 41.6 area off of one of these indicators or averages, or what could happen is that we just falter completely. We don't gain any steam from the bulls, and we fall back down to the 382, even maybe a wick down to where there's this very strong base of support at 37.5, and come right back up and stay within this ascending triangle that we close back into. And then we get a bounce from here or down here, and then move back out of the ascending triangle above the golden pocket above 46K, retest the 200-day moving average, and then boom, we're off to the races. If we break back above 48K, it's only 2K above to get to 50K, but I'd say 50K is a given at that point. And then the bears would just be squirming and just pissing themselves at that point. So I think the bulls would be in very strong control. I thought we would be this time getting above 46K, but things happen, things change. So I got to adapt and not let myself get stuck in that bull bias, because I want to keep the money that I got and make some more, right? And you do too. So be willing to change and adapt. So right now I'm looking for potential bounce in this area. If not, we'll be looking at the 382 around 40K, right? To me, 40K is important to hold on to because it's right around the ascending triangle bottom. It's at the 382. And I really don't want to break out of this because that's just one more bear case to be had. And really, retesting this area again, the more you retest an area, the more likely you are to break it. So I don't want that to happen. So look for the bulls to be doing something within, this range right here, this next 3K from here. Now zooming into the 1 hour, I just wanted to paint a picture for you on some of the low time frame moves that we had that led to where we are at now. you can see that we had a top at that 200-day moving average on the daily, but here you can see a local top made on this 1 hour candle. There's a double top right here, boom, and then we were not able to create a higher high at that point. We kept doing lower highs from there, weaker, descending into weak support here, and then broke down. And 47K then acted as strong resistance on the low time frames. And we tested it a couple times here, pivoted down from here, actually all the way retested, like I said before, the ascending triangle, that 45K area. We retested that, got a nice bounce here, and I was optimistic that this could be the push that we would need to get back above that local top and onward to 50K and keep pushing up. But we did get rejected, unfortunately, at 47K, which made it a stronger level of resistance for the bears to defend. So this is this here and over here would be really great areas to be looking for shorts, because now this was support, they flipped into resistance, so now you know within this range this is a local key area of resistance the bears want to hold on to, and they're going to try their best, right? And so they did. This was sort of a megaphone pattern that there was an up thrust above it, and once we got that up thrust and closed below resistance again, and then this engulfing candle, boom, you know that things are not looking pretty. And from this point is something I wanted to highlight. I tweeted it and posted it on TradingView, but I think it's something interesting to take note of, because this blue line here is the EMA 8, the 8-day moving exponential moving average, and it moves very tightly with the price. And so there will be fluctuation above and below the price, you know, in sideways action or slow moving up or down action. So not much to glean from that. But when price is in a trending market and it's moving up or down very aggressively, it's trending, you can trade off of this EMA 8, and because it'll act as a resistance or support when in a trending market. Not as much in a sideways, you can see it chops right through it. So I like to look at the pink line or the yellow line, which is the 34 and the 89 day moving averages, which have correlation to fib levels, fib extension numbers. There's a number of other EMAs and moving averages that everybody uses. Those are just the ones most recently that I have gravitated towards because I've seen so many patterns off of those. But as you can see here, from the beginning of yesterday, about 8 a.m. Central Time, we closed below the EMA 8 and have not been able to get back above. Rejected. We had one candle close above, which I'm saying 2 candle closes above is going to be of significance on the 1 hour time frame, showing that the bulls are showing signs of life a little bit. And until then, I mean, really, you shouldn't be looking for longs. You're looking for shorts. You don't have to be trading in this range, but I'm saying if you're going to be trading right now, the bears are in full control on the daily and on the 1 hour. The big levels have been lost on the high time frame and low time frame. You can even see there's this diagonal that I have that was acting as support. Oddly enough, with this chop through, it came back up and it still respected this. Just something interesting that I found. Not something I would necessarily be trading off of, but just something that it looks interesting because it respected it for so long. And then what could be seen as a head and shoulders pattern off of it right here broke down, and it did hit the technical head and shoulders pattern from here, target, and it tagged this MPOC down here. So what am I looking for right now? So if I'm going to be jumping in a trade, which I got a lot of taxes to finish up, so I'm not, but if you're going to be looking at the charts and looking for a trade, so there's an MPOC right here at 43.8 on the 1 hour time frame. If you look at different time frames, you can see some fluctuation, a little bit of movement where you might place the naked point of control. But right there, you can move it down, just be a little bit more conservative, 43.7, 43.8. Price could try to climb back up to there, get a wick back down underneath the EMA 8 and keep moving steeply down. I do think that we're due for a bounce. It doesn't mean it will have to happen, but I think that some sort of bounce relief rally will start brewing here soon, because we've chopped through a couple of these MPOCs already. And so we did find support off of the 43K MPOC, and we closed below it and closed immediately back above it. So I think we could try to come back up here. We filled this MPOC up here. So here's another one all the way up here at 44.7. We could get all the way back up here, but the deal with that is that you've got this diagonal, you know, whatever, maybe it's not as important, but then there's this yellow line, which is the daily top of the ascending triangle that should act as resistance. So a barrier right before this MPOC. So I'd be looking more at maybe shorting right here because of some confluence with this diagonal and this horizontal. So I'd be looking at that. And then I would be, if I'm looking for longs, I'm going to wait for something to develop, maybe some deviation on the 1 hour, 15 minute, and probably for me, honestly, if I'm trying to predict where price is going to go from here, I'm looking at 42.4, 42.2, 42.5, somewhere in this range right here where there's this open air. I'm guessing that's probably where we will get to and probably find the most logical area for a strong relief rally back up to the 45K level, 46K level. It could develop here, just betting that it'll probably fall back down to here. We don't want to lose this area because there's still a lot of open air down all the way down to here, 41K. Not to say we couldn't find support somewhere in this base over here around 42K, but I really want to see 42K hold right around here, and this be the area that we bounce and get right back up in above the ascending triangle range that we had been trading in since January. So again, talking about being flexible, it's important to understand kind of high time frame where we're at, low time frame where we're at, how we got here. And there's just not a lot of reason to be bullish at this point. There are scenarios that could play out based on previous history and kind of moving averages that we could be bouncing off of, but based on what has happened just now and what was and should have been support, and it's not, and it didn't happen, bears have the edge. So being level-headed, you know, being more in the mind to look for shorts at this point is kind of where I'm at, until proven otherwise. Until we get a strong volume of some rally through a resistance level, then we can talk. But like I said, I mean, we haven't since yesterday been above the EMA 8 on the 1 hour. So that is no bueno. What's up, DJ Bravo? Thanks for jumping on, man. What have I missed? Really, man, just talking about the daily time frame and the 1 hour time frame, some of the moving averages, descending triangle on the 1 hour. Most traders miss that bearish signal. Falling wedge on the 15 minute if you want to check that out. Yeah, let's check it out. I got nothing on the agenda other than those two things I wanted to highlight. So we'll clear it out, zoom in. All right, let's see. Yeah. There's just been such a steep and steady decline. It's unreal. I'm kind of surprised that we haven't got any relief rally just yet. Yeah, so I mean, you got this descending line here. Yeah, definitely. So I mean, this could be the first signs of life here, and I wanted to see where we're at on the EMA 8 just to see. So yeah, we're close to the EMA 8 here. I'm just gonna point that out right about there, because that's really where we at on the 1 hour. So we got 2 minutes till the 1 hour. So it kind of sucks because if you see a pattern, right, and you want it to break, and let's say that price starts breaking up right after 10 o'clock. Well, there's a 4 hour close on the next hour close. So you got to pay attention to that. What does the 4 hour look like? Is there any levels of interest that play into the 4 hour? Okay, so no. So the 1 hour, I'm looking at this EMA 8. Well, I'm not going to get a break above on this 1 hour. So any movement above, it could be a fake out by the time the next hour closes. So I would personally want to wait until the 11 o'clock central time for me, or this next hour, to see if it can close above this 1 hour. and not just jump the gun. I mean, you could try to scalp a quick move if there was a 15-minute close on your descending wedge you're watching. Right here, you can see it's already starting to kind of break out. You know, scalp a quick pump. But you've got the EMA 34 right here and the EMA 89 up here. But honestly, there's this MPOC on the 15-minute. You might just play it up to that. That's a 1% move. So yeah, maybe if there's a, let's see what the volume looks like. Man, so there was a sharp sell volume right here, and then really weak volume coming off of this bounce. So I don't have too much faith. And it's funny. If you zoom in a little bit more, there's a little inverse head and shoulders. You can see right there kind of forming. So yeah, maybe this is where we get the relief bounce right at 43K, because we did have a quick dip below and then a candle closed right above it, like I was saying on that 1 hour where we had that MPOC fill and then we closed below it and then quickly closed right back above it. So maybe this is where we find support. I've got to get to my taxes. I've got too much to do, but yeah, man, I mean, maybe this is kind of where we get going. So potentially look for a long here, but again, I mean, my instinct is saying that even if we do get a little bounce back up to fill this MPOC and maybe a little higher, I think inevitably before we crack 46K, I'm guessing we get back down to 42 at the very least, 42.2. But thank you guys for watching. Thanks DJ Bravo for jumping on, my man, and like, subscribe if you haven't already. And definitely check me out on Twitter if you have not. That's where I post most everything. Eventually, I'm going to have a Telegram channel where I'm doing all of my setups there. But for now, it's all on Twitter. And